Think. Act. And prosper. You are now tuned into the Money Level Show.
Today, I got Rick Rule back on the channel. Last week, we had some conspiracy. I don't know if it was aliens or what, but it kicked the internet off. And so, but we're back on Zoom. I was going to say back in the flesh, but we're back on Zoom. And so how you doing today, Rick?
Life is great, Daryl, and I apologize for the technical difficulties on my end last time.
Yeah, I experienced some too, so it's all good. It's inevitable, it seems like. So, on our last, interview, like we had a few clips, and I was kind of thinking about this, so you're, in your 70s, right? And you're retired. And I had a talk with a friend before, and she told me that the older she gets, the less she cares about what people think. And so, I know that some of the topics we touched on, like, hurt some feelings, but, I just wanted to kind of get your take on, like, as you get older and as you get, more financially free, you're retired, you're not dependent on somebody else's to cut your check. Necessarily, or whatnot. Like, how does that play with you being able to just be more bold?
Well, I can certainly afford to speak freely. I've worked hard in my life. I've been lucky. I haven't spent much. And the circumstance of that means that I don't have to be afraid of hurting somebody's feelings for economic reasons. That being told, just being who I am, I tend to have a natural ability to offend people. And I sure don't want to do on purpose what I do too well, accidentally, which is to say my preference would be to engage in intelligent, mutually beneficial conversations with everybody. Mm-hmm. There is, for whatever reason, and probably it's my fault, a large body of people in the world who disagree with most of what I say, most of who I am. There's not much that I can do about that. You and I discussed before we went on the air the fact that often people will hold a negative opinion about you because of beliefs that are central to who you are. And in that circumstance, you can't allow yourself to be defined by somebody who has an interest in disparaging you. It's bad enough that they have a bad image of you or they cause other people to have a bad image of you. What you can control is you can't let them cause you to have a bad image about yourself. And one of the lovely things, and by the way, I'm not 70 yet. I'm 69. So you can't disparage me for my age yet. But at any rate, I think one of the things that really has come to me with age is the sense that other people's opinions of me are interesting, but not necessarily important. It's my own self-image and the way that I play in communities that I choose to inhabit that's important to me.
Yeah, that's good. That's good advice, because I've been noticing the shift in me. I'm only 34, but I've been noticing, like, as the more I get older, the more, like, direct and bold I am, and less beating around the bush. And, like, it's just like, hey, like, I don't have time for that. Like, this is what it is, and I'm gentle in everything when I try to communicate things, because I do have, like, my background. I'm a certified mediator. I do a lot of restorative practices and such. So I honor people's voice, and I really focus on dignity and respect for everybody, even those that may piss me off. I try to hold a view, but we're all trying to do this work on ourselves or whatnot. And so I try to, make sure that, I communicate things in a gentle way, but obviously people aren't going to accept it, the way you try to communicate it,
I think reasonable people will accept respect, Daryl. I think too, you and I have talked on your show before about Pareto's law, the 80-20 principle. And the truth is that there's going to be some amount of humankind on any particular topic who you just don't want to waste time with. Yeah. If somebody is fundamentally hostile to you, rather than spending a couple hours of enduring their abuse, spend those hours communicating with people that you can communicate with. I'm not saying that you should piss off or diss the ones that you don't want to hang out with.
Yeah.
But don't waste too much time with them. There was a time in my life where I wanted every single possible customer I could get. And what that meant was that I spent literally hours on people who were drains on my time, drains on my imagination, drains on my intellect. And I guess I was about 30 when I started aggressively firing clients, getting rid of people who I couldn't adequately serve, and then lavishing more love and care and attention on people where I could much more directly benefit them. And I've certainly done that in my declining years. I'll fire an acquaintance very quickly if I see that they and I have real fundamental differences that would prohibit us communicating respectfully.
Yeah, for sure. That's good to know. And I've been, having like, I have some people like, I have a few haters on the channel or whatnot, but I'm used to like I get into these little snarky remarks and responses and stuff, and sometimes I just like it. I like to engage in conflict. Daryl,
where I said that you can't allow yourself to be defined by your enemies, you can use your enemies as a measure. I'm proud of most of mine, and the truth is, as your channel grows, you're going to encounter more detractors. And if you look at the point of view that your detractors come from, what I suspect is that you're going to become proud of the stands that you've taken. I think that the people who are going to be your detractors are going to become caricatures or points of view and types of actions that you consider to be reprehensible. So you will be able to be measured in one sense by who your detractors are. And I suspect that by that measurement, you'll shine.
Yeah, for sure. And that kind of relates to like, in investing, looking at your bear case scenario.
Yep.
That's I'm just thinking right about that. And so like, how do you process your bear case scenario? Because some people like, we've had like a lot of liquidity in the system, and, people have, I was talking with Mark Yusko the other day, and he was talking about like, one of the 4 quadrants was a bad investment or bad decision, good outcome. And then we were talking about that, like a lot of people were able to just, throw a dart anywhere and profit, and didn't really assess like the bear case scenario. So what's your take on assessing the bear cases?
Well, you said a lot there. And so I'm going to try and wade through it as best I can. In industries that I understand, I believe that any investment decision that you make, that you can't document 3 risks that scare you, is an investment decision that you don't know enough to make. In other words, if you can't figure out at least 3 things that could go wrong, you don't know enough about the investment to make the investment itself. My primary bear case always begins with me. That is to say, the biggest risk that I can identify is conveniently located to the left of my right ear and to the right of my left ear, right in my brain. And what I have done to eliminate that risk is I don't make any investments anymore in industries where I don't consider myself to be very well armed, very able to compete with other investors. So as an example, when all these cannabis stocks were the rage, I hadn't done any firsthand due diligence in the cannabis business for 4 decades, and to me, it was a consumer goods marketing business. So rather than get myself all hot and bothered by the fact that the liquor business was big and the cannabis industry could grow, I just disqualified myself because I didn't understand it. The same thing with technology. I've probably invested in 5 technology stocks in 49 years of investing. I avoided my own personal bear market because I stayed out of a sector that I felt that I didn't understand. Now, I think the other part of your question goes to the fact, and you and I have discussed this in past interviews, where we're headed into a less benign economic climate. The last 40 years have been a Goldilocks era for investing. The baby boomers came of age, so there was that wonderful demographic surge of productivity and savings and spending. the baby boomers, let's be charitable, they're dying now, or those of them that aren't dying are beginning to look like me, which is to say, well past their prime. We also experienced 40 years of declining interest rates, which was a wonderful thing. We witnessed 40 years of globalization, of trade, of specialization, intelligently constructed, not by government, but by people. Global trade makes everybody richer. And we had 40 years of inclusion, the introduction of women to the labor force, the recognition that business leaders didn't have to look like me. We got the benefit, the increasing benefit of utilizing all of the IQs of humankind to go forward. Some of that is past us now. The idea that you can take interest rates much below zero, negative real interest rates, means that interest rates are likely to go higher rather than lower. That's going to be a challenge. It would appear now that globalization has given way to nationalization and fractionalization, which makes us poorer, not richer. The demographic boom that we enjoyed as a consequence of the coming of age of the baby boomers is giving way to the baby bust. Now, there's lots to be enthusiastic about, but what we have to be enthusiastic about is fundamentally different than what we had to be enthusiastic about 40 years ago. And folks are going to have to adapt to that.
Mm-hmm. Yeah. That's you paint a picture that in my mind, it's like, all right, now what do I do? It takes a lot of, analyzing of these, especially with like the markets, like, people could just throw darts, and pretty much profit anywhere. And we talked about, the energy crisis and structural inflation and the underinvestment into commodities and all those different things. And so like now we're coming in a new shift. And then you have the factor of like the world is like deglobalizing and, especially after the Russia-Ukraine situation. So yeah, it's a lot of factors at play. The decline in interest rates, now they have to rise interest rates. That way at some point they can cut again or whatnot. But I don't know if interest rates are going to end up negative or what, and so it's a lot of different factors we got to look at now.
The most important thing, Daryl, is that you control what's controllable.
Yeah.
When I was active managing other people's money and investing, I would talk to investors who would say, the world's going to hell in a handbasket. I can't get ahead because of President Clinton, or the world's going to hell in a handbasket because I can't get ahead because President Obama. The world's going to hell in a handbasket. I can't get ahead because of President Trump. Now, none of those three guys knew who you were or knew who I was. They had almost no impact on the outcome of what you were going to be able to do. So the first lesson is, no matter how scary the future is, don't allow yourself to be frozen into inactivity because of fear. There's a whole bunch of people who compete with you who are going to be frozen into inactivity because of fear, and they've disqualified themselves from the race. Pay attention to what you can control. Make yourself a better person. Make yourself better able to serve your customer, whoever your customer is, and you're going to do absolutely and comparatively fine. Don't allow yourself, as a consequence of nervousness over the political situation or the economic situation, convince you that the world is somehow conspiring against you, or give you permission to quit. If you quit, for sure, you're going to lose. It's a guaranteed loss if you quit. When I look at some of the stuff that's happening, when I look as an example at the democratization of technology and the ability of people in frontier and emerging markets to access the internet and access the cumulative knowledge of humankind, one of the things that makes me really, really optimistic about the future is, we talked before about 6 young people commandeering a garage in Sunnyvale, California, and out pops Google or out pops Apple or something like that. The really good news looking forward with technology and with communications and all that is that garage could easily be in Sao Paulo, Brazil, or Jakarta, Indonesia, or Lagos, Nigeria. It isn't going to have to be in Silicon Valley anymore. Because of technology, all of a sudden there's almost 8 billion players in the world. Arithmetically, that's a lot better than it was 50 years ago.
Yeah, for sure. I actually got my new intro done on the channel. It's fantastic, and it was someone out of India. So I can see a lot of the technology needs being exported to other countries as well. So I kind of had a question for you because earlier you mentioned like the pot stocks, and I was wondering, are you into the tobacco stocks? Like I know so I'm into them, and I kind of, it's kind of easier for me to like play because I know there's only a few companies that can exist, I think because of some regulation or something like that. I was wondering if you ever touched or if you into the tobacco.
When well, first of all, I smoked about 3/4 of one cigarette in my life. It didn't agree with me. I'm not against it, but it wasn't for me.
They nasty.
I regard the tobacco stocks as consumer products marketing stocks. As you say, there's an enforced oligopoly. There's a limited number of competitors, which makes them good. And ironically, they're in partnership with the government. The government needs the revenue from from tobacco. A deliberate slip. But anymore, Daryl, even if I think of something as cheap, I'm unlikely to participate in it if I don't feel like I have an intellectual advantage over most of the participants in the market. And there's a whole bunch of people that understand branded consumer products better than me. Yeah. I don't own a TV, so trying to analyze how a narrative might impact a market, in other words, how competitive somebody was in a branded products business, is not an intellectual exercise that I feel like I have an advantage in. I have an advantage in commercial banking, in lending. I have an advantage in oil and gas. I have an advantage in mining. I have an advantage in timber. I don't have any advantage at all. In fact, I have a disadvantage in branded goods and consumer marketing businesses. And so I don't invest in them.
Yeah. I got you. So what's your take on, I kind of want to talk. So we talk a lot about energy and stuff, and everybody's hype around uranium and everything. And I think we've talked about that a lot. I've watched a lot of you talk about that a lot. Let's talk about commercial banking like stocks or whatnot. So I was kind of doing some research. I've been looking at the company. I think it's HDC. It's in India. It's a bank that I think it's the largest bank in India. I've been looking at that. And then also some of the other banks like US Bank and stuff like that. So are those the type of banks that you invest in?
My largest banking investment right now is a banking organization called Battle Bank, where I'm backing a team to build a bank. This will be my the seventh bank that I've been deeply involved in. Our prior activity was in, I guess, 1998. We started a bank that became EverBank. It was one of the first internet-only banks in the United States. We grew it from zero to asset value, net assets of about $28 billion before it was sold to TIAA-CREF. So my principal commercial banking activity right now is starting a new bank, a risky activity, but one I'm good at. The banking business itself is a superb business, particularly for me in the United States, because I understand banking culture and I understand banking regulation. The idea that a depositor such as yourself deposits money in my bank, what happens is, in effect, you aren't lending the money to me as a depositor. You're lending it to the U.S. government because they insure your deposits up to $250,000. So I can borrow money from you as a depositor, and I'm paying you 1.1, 1.2%. I might have a 0.5% non-interest expense. And even if I just use the money to buy 2-year treasuries, I can put that money out at 2.25%. In other words, I can leverage a 2.25% investment 10 times against my equity. I mean, these credit spreads, if you don't make a mistake, if you just are prudent, if you don't mismatch your time asset and your time liability, meaning if you don't lend too long and fund it with short-term funds so that you as an institution can be beat up by interest rates. If you maintain your credit quality, these banks are fantastic businesses. The great big banks are fantastic businesses for a different reason. They're protected by government. They're too big to fail. When these guys absolutely positively screw up on an epic scale, they go to Congress and say, oops, too bad, so sad. You got to give us $1 billion or $1 trillion or the world ends. That big bank put is the stupidest thing I've ever seen in my life. I remember, I'm sorry about this tangent, Daryl, but in 2008, when these over-leveraged morons just about did bring the financial system to a break, to a halt, they told the federal government that the federal government had to give them continuation bonuses, that it had to pay them to stay or they wouldn't stay. Those morons that worked for me, there would have been no question. They all would have been working at 7-Eleven, and the idea that those guys managed to convince the federal government to pay them hundreds of millions of dollars to continue on with the mistakes that they'd made over that decade just astonished me. So in that sense, the great big banks, the Bank of Americas, the Wells Fargos, the JP Morgan Chases, those are very, very, very good businesses. The guys who run them too hard. They don't have enough equity in them relative to debt. They take too many speculative trading positions to goose profits because they get paid on options. But the basic businesses, we could talk about spoofing sometime. The basic businesses of banking are superb. I prefer the community banks. I prefer a bank that's small enough that I can analyze the lender. I can do all that kind of stuff. I don't myself compete too much in the big banks because they're too complex for me.
Gotcha. That makes a lot of sense. Okay. And then what do you think? So I've been hearing the banks are in a better position because of regulation that was required from after 2008. Would you say that that's the case? Your base case, would you say the banks are a safer place to be than obviously I think they're safer than 2008, but yep. Say if we have a recession, we're probably in the recession, but if we have a depression or whatever, some type of economic, catastrophe, how would you think that the big banks would play out in that?
The banks are basically in a better position because they're much more aggressive selling through their long mortgages, their 30-year obligations to insurance companies and the bond market. One of the things that went wrong for the banks is that they lent money for 30-year terms on a fixed return basis, fixed mortgage, and they were funding that in the overnight credit markets. And if the interest rates changed, their interest spread went away. The big banks have been much better at matching time with liabilities and assets. And the banks, by the way, are much better capitalized. The FDIC considers 7% equity slice on the balance sheet to be well financed. I don't happen to agree with that. I think that capital ratios need to be higher. And you're seeing some of the big banks operating at much close to 7%, 10% than 7%. And I think that's healthy. Where the difficulty runs is that all of the big banks have really outsized derivative books. And I don't mean just derivatives that they use to handle credit risk or interest rate risk, but rather very long tail liabilities where they're the intermediaries between long and shorts. When you have a bank like JP Morgan Chase with $50 trillion in nominal derivative liability, if anything goes wrong, it goes really, really wrong. And I granted, Jamie Dimon and the guys who run those big banks are much smarter than me, but I don't think they're enough smarter than me to run a $50 trillion derivative book.
Yeah. That's a lot. That's a lot. One thing I was kind of researching was the emerging market, stocks, Brazil, China, all those different places. And after 2000, when the tech bubble popped, we had a big rise in emerging market equities. Would you say like those are a good place to kind of look? I mean, because there's somewhere to look like whenever, because I think that the U.S. equities are going to go down even further. And so I'm just trying to see like where to look, and I've been looking at Brazil and Chinese equities, but China's going through a slowdown now too. So that kind of, I just kind of don't know how this look on a global scale with inflation and interest rates and such. So
this is a good time to start looking at those markets, but you buy tertiary markets, emerging and frontier markets in crisis. When there's a liquidity squeeze, if the US market declines by 30, Brazil declines by 60. When that happens, when there's a crisis, when there's a flight to safety, the contrarian investor, provided that he or she has done sufficient research in the market that they're considering, when everybody flees a market, that's precisely the time you go in. It's easy to say, it's tough to do. I believe for most people, yourself and myself included, that the United States market is the best place to be, provided equality of opportunity, which is to say, if you had a US company that exhibited the same price to value characteristics as a Brazilian company, you would prefer to be in the United States because the United States has much more developed capital markets. It has still much more rule of law. It has a much, much, much larger capital pool. It is easier to build a big company in the United States than it is in Brazil. If, on the other hand, like me, you're a natural resource investor and speculator, and you see a small company that's made a large nickel discovery in Brazil, and you see that discovery is better than anything that exists in the United States, sometimes you have to take that political risk. Sometimes you have to take yourself into a culture that you know less about and is also arguably riskier because the opportunity is so much greater. If you're going to make a thematic move into frontier and emerging markets, I think you need to do it in times of crisis. This is in the 80s, I used to occasionally trade the bellwether Mexican stock, which was Teléfonos de Mexico, the national telephone company there. And what you could do in the 80s is anytime there was a political shock in Mexico, and that used to happen sort of every 3 months, the Mexican stocks would sell off and you could buy Teléfonos de Mexico. And as the world forgot about what had scared them, the price would go up. Mm-hmm. And you could sell it. I remember very well when the Mexican presidential candidate, Colosio, got assassinated in Tijuana. The Mexican stock market fell overnight by 35 or 40% and kept falling. It wasn't 3 months later that the world was looking at growth rates in Mexico and couldn't even remember how to spell Colosio. But in order to participate in that trade, you had to have the courage to buy those stocks when a presidential candidate got assassinated in public. I'm not saying, by the way, to buy a market that somebody needs to be assassinated. What I'm trying to say is that you buy risky markets when the risk is highest or the perception of the risk is highest.
Mm-hmm. Yeah, for sure. I mean, that's what we did with the Russian stocks too. And
yeah, it didn't work too well.
I don't know what happened to Gazprom. It's like disappeared off of my.
And it's ironic that Gazprom as a company goes from strength to strength.
Yeah.
Gazprom's earnings are up substantially, but it doesn't benefit either you or I because we can't do anything with it right now. One of the things that you have to understand about taking risk is that you experience it from time to time. And that is a consequence.
Yep, for sure. Um, so I kind of want to transition to gold. So I've been stacking gold. I'm still stacking gold and silver. And I started looking at I started buying into Newmont Mining. They
Right.
went down about $40. Um, that's cheap for that company, and they pay a pretty decent dividend. What's your take on the gold market and some of the miners like Barrick Gold or Newmont?
I believe in the very near term that rising U.S. interest rates are going to continue to hurt the gold price. I'm surprised actually that the gold price isn't a little lower. The gold stocks, if you look at the net present value of their free cash flows relative to their enterprise values at today's gold price, are probably the cheapest I've ever seen them. Very, very high quality companies like Barrick or Newmont paying 5% dividends and paying 5% dividends while still investing substantial amounts of free cash flow in sustaining capital and new project investments is truly spectacular. I think that you're going to need to wait a little while because I think thus far the Fed has been successful and will continue to be successful in raising interest rates. If the increasing interest rates that we're seeing have the effect that you and I have talked about in prior interviews, which is to say making new homes unaffordable and ending, if you will, home construction, making consumer durable purchases like automobiles less affordable, making the interest charges on the debt to federal, state, and local governments unaffordable, meaning if, as, and when the Fed has to back off allowing interest rates to rise, then I think you'll see gold go crazy. If the Fed blinks, I think you'll see gold go absolutely crazy.
Yeah, because that I believe that happened I was looking at like when gold went from like $200 to like in the early 2000s to like, however much it went to in 2011. But and there was a point in there after the dot-com bubble where the Fed started raising interest rates, and then you had the financial crisis, and then they had to cut interest rates again. What was happening with gold there? Like that's kind of that relates to this period.
You got it. I mean, gold does well during periods of time when investors and savers are worried about the real returns, the inflation-adjusted returns on other classes of saving assets. Right now, people are less concerned. They're seeing deposit interest rates rise. So somebody who goes to a bank who used to be getting 0.5% is now getting 1.2%. He or she feels a little better about that than they did before. If they look at that 1.2% against the destruction of the purchasing power of their currency, which is to say 9% inflation, they're going to feel less good about it. But that takes some time. What you see is that interest in gold tends to vary inversely with the direction of U.S. interest rates.
Mm-hmm. Yeah. Okay, I can see that. And there was actually I'm still trying to get through this book, The Power of Gold. Right. It's a long book, but it gives a lot of context to history. Right. I'm learning a lot of things, like I'm re-looking at history, obviously we have our history in the United States, but then like, you read things about like the Arabs and how they took over countries and in this fight for gold and gold, becoming money and everything. And so like you start to see things in a different perspective. And it's like, okay, well, there has been like people of color that have like taken over like, countries and stuff. And so that's just like human nature. But like one thing that was profound that I just I read recently in the book was it said gold is like gold does well when there's chaos.
Mm-hmm. But
so,
historically, yes. As an example, if you were to talk to somebody of my age who was Vietnamese, who came here as a boat person, they'll tell you that the way that they were able to get out of Vietnam was not officially, it was because they had gold. If you talk to somebody a generation older than me who is Jewish, who managed to get themselves out of Europe, It wasn't because they had a polysyllabic last name. It was because they had gold. So gold has done well during periods of crisis because it's a universally recognized store of value. And it's relatively valuable given the size that's required to complete a transaction. What's interesting about the history you study is that for some reason, gold was recognized as a store of value, as a medium of exchange, and also as an item of beauty for religious iconography and jewelry in every developed culture in the world. Gold was popular in the central part of South Africa, in what is now Zimbabwe. Gold was popular in Northwest Africa, in what is now Ghana and Nigeria. Gold ran the Arab world. The Europeans coveted gold. The Chinese coveted gold. The Indians coveted gold. And in this hemisphere, cultures like the Mayas and the Incas also coveted gold. It's interesting that cultures that ostensibly had no connection with each other, at least no proven connection with each other, or very undeveloped connections with each other, all developed the same reverence for the beauty and malleability of gold, and all regarded it both as a medium of exchange and a store of value. I think that's very important.
Yeah. That gives me like more confidence in like, owning gold. Cause there's this whole, like, especially the last couple of years, this whole gold Bitcoin thing. And, me, I have more gold than I have Bitcoin. I speculate in Bitcoin or whatnot, and I like the technology, but, like that thousands of years, man, it's hard to compete with that, those thousands of years of history and it being a store of value.
If you look at the response to people in real crisis, gold has done a good job for them. Gold has done a very good job for them. I think I've said on your program before, I own a reasonable amount of gold, more gold than I probably need to, given my shareholdings in Sprott, which will do well if the gold price increases. But I own gold as an insurance policy. It's odd that I own a lot, and I kind of hope the price doesn't go up, because the set of circumstances that makes the gold price go up is problematic for the rest of my lifestyle. And I enjoy my lifestyle just as it is. Mm-hmm. I would like nothing better, Daryl, than to shed my mortal coil a long time from now and look back and say, you know what? Those gold holdings were a mistake. The world just got better and better and better. I don't think that's what's going to happen. And I got to say that one thing that gold does do is it allows me to sleep nights and stay calm. And having a gold insurance policy allows me to be more aggressive with other parts of my portfolio and more aggressive with other parts of my life, knowing that if worse came to worse, I'm likely safe as a consequence of my gold.
Yeah, for sure. And what would you say, like, as far as like, allocation of, net worth or whatnot? Obviously some assets, a net worth for like, your house or whatever, you can't really, it's not very liquid. But like, as far as like having cash, gold, and then also investing in the markets, like what's something that you do, and what's some tips for the audience with?
It really varies person to person. I understand the question, and I understand that your audience wants a one size fits all answer, but there isn't one. Gold for me has proven its worth over my whole life. And the consequence of that is that I'm comfortable holding it and uncomfortable not holding it. So for me personally, in addition to having a financial benefit from it, I have a psychological benefit. It makes me feel more secure. As I say, rationally, if somebody, some financial expert looked at my portfolio and saw how much Sprott I owned and how many gold stocks I owned, how leveraged my expertise in my life was to gold, they say, Rick, you shouldn't own any gold. And I would thank them and smile and continue to hold it, because I own it in some senses for psychological reasons as much as for financial reasons. There are some people whose financial circumstance is more precarious than mine, who live in a circumstance, say in modern day India, that probably need to have half their liquid net worth in gold. If they store their liquid net worth in rupiah, they know that the government will destroy their purchasing power by 15% compounded. If they store their wealth like many Indian peasants do in physical goods, let's say steel roof panels, a neighbor might steal the steel. And in that circumstance, that person would need to own more gold than me. So the honest answer is that the characterization and distribution of your portfolio is going to be more a function of your own needs and perception than it is the world.
Mm-hmm. Yeah, for sure. Because I probably got like 50% in precious metals.
I think that's probably too much. I mean, if I was going to talk to you, I'd be investing more money in building your channel, in building your own personal business.
Yeah.
Sure. What I've seen for people that have the ability to generate value in their own business, the greatest determinant of how much wealth they acquire over their lifetime is their ability to grow their business and their ability to grow their intellect around their business. Your ability to grow your market and ultimately to develop enough value for the people who are your subscribers that you can in some way, shape, or form monetize that is going to be the best investment that you personally can make. At age 34 or whatever you are too, Warren Buffett says in the long term, betting against America is a very, very, very bad bet. While I suspect that the S&P 500, and in particular those components of the S&P 500 that have met or exceeded their dividend forecasts every quarter for 30 years, the so-called dividend aristocrats, over the course of your lifetime, those will be very good investments. They may not be for the next 2 or 3 years, but over the course of your lifetime, for all the problems that we have in the United States, we still have way more opportunities than we have problems. So don't forget mainstream America. Don't go overweight it while they're raising the interest rates too much. But remember, over time, you will do extremely well in the best companies, the best defined by the companies that make the most amount of free cash flow from steady franchises over time.
So in other words, stop buying. You're like, Daryl, you need to stop buying gold, man, and invest in channel.
I reckon you got enough. Invest in your channel. Yeah, invest in your channel. I mean, what's good is you have 50% liquidity. You might not like the price you have to sell it for, but you can sell gold in a nanosecond. And that part's good. Most people today don't have enough liquidity. Most people today live from paycheck to paycheck. If something goes wrong, if they go out of work or something like that, these guys are stopped out in a month. The fact that you have 50% liquidity is a very good thing. You know, I ask most people to have a minimum of 3 months living expenses in cash. And people say, that much? And for me, that's a minimum.
Yeah,
like
for sure.
Bare minimum.
Yeah, I agree. Yeah, I went on this whole stacking thing, and it was it got addicting for a while. Now I think.
Well, you could have worse habits. I've always asked people, like I've asked on your show, that they save 10% of every paycheck pre-tax, that they pay themselves first, that they save. If that means that you don't get to have beer on Friday, too bad. If it means that you don't get to have Starbucks, too bad. If it means that you're going to drive around an old clunker car as opposed to the car that you would prefer to have, too bad. Save 10% pre-tax. The only way that you really get ahead in life is by having your capital work for you rather than you having to work for your capital. The only way you become a capitalist is to have some capital. And the only way you get capital is to save. And you've done that. And you stored that surplus in liquidity, which is good. I just think you're probably overweight gold.
Yeah. It's kind of interesting because, when I have like a lot of cash, at one point, I was on the Dave Ramsey thing, and I was like, oh, we're eating beans and rice, and we're we're not spending anything. Now it's like, you see like a lot of cash in your account. Me and my wife, we like to spend, and stuff. And so if I put it in gold, I'm like, okay, I got to go through a hassle. I got to jump through this hoop to sell it, hoop to sell it. So it's kind of trying to find that balance, and discipline.
Well, I'm not trying to say that you shouldn't, you got to have some fun in life. You and your wife have to have some fun. You have to go out to dinner. You have to spend money and stuff like that. But you can do that because you've already learned to save. For some people who are listening to your channel, I'm willing to bet that they can't spell save, and 10% pre-tax is a minimum. You start your budget, your household budget, by saving first. That's what you spend money on first. What you do with the rest, I don't care so much about, but you pay yourself first. I also, I don't like borrowing money for things that don't generate money. I'm absolutely in favor of buying money to own a piece of rental real estate where the rents over time pay off the mortgage, especially where my mortgage is fixed and my rents over time go up. That's good borrowing. But borrowing money to buy consumer goods, borrowing money to fund your lifestyle, borrowing money to buy a car where it falls $2,000 in price the second you drive it off the dealer's floor, that's stupid.
Yeah.
It's just stupid.
Sure. Yeah, definitely. It's definitely a lot of those things, out there for sure. Well, Rick, I appreciate you for coming on and everything. Could you connect us with your rankings, your portfolio?
Yes,
rankings?
Sir. Yes, sir. Any of your listeners who care about what I have to say about their resources, are encouraged to find out. Go to ruleinvestmentmedia.com, list your natural resource stocks. Please no pot stocks, please no tech stocks, please no crypto. Just resource stocks. I'll rank them 1 to 10, 1 being best, 10 being worst. I'll comment on individual issues where I think my comments might have value. In addition, if you're interested in becoming a customer, either a borrower or a depositor in my new bank, an old-fashioned bank, one that has money in it, in the question and comment section at Rule Investment Media, simply write in bank. And we'll get you up to speed. And once we get our charter, hook you up with what we think will be the best bank in the United States.
That's amazing. I'm on board with that too. All right, Rick, thank you for coming on today.
Always a pleasure, Daryl. Thank you for the opportunity.